Let's start with the gold prices, which have eased ahead today ahead of the U.S. Fed's policy announcement later tonight. The Fed is expected to trim its bond purchase program by $10 billion, reducing its monthly purchases to $55 billion, thereby diminishing the safe haven value for the precious metal. The gold prices on your screens down more than $10. That's $13.45 as the last traded price. The crude prices also are under pressure and they have slipped, with Brent hovering around 106 right now. The fall comes on the back of expectations of a rise in the U.S. oil inventories. On your screens, 106 is just about holding, so more than 0.5% of a cut there. Let's get in then. Vijay Bhambani, who's author and CEO at BSPL India. Also joining us in the studios is Ajay Kedia, who's MD and research head at Kedia Commodities. Vijay, hi, let's go with you first. And what's your sense really on the gold and silver? Because much of what the FOMC could be doing has been anticipated and factored in by the markets.
Good evening, Manisha. And likely, as we've been saying since the last 2 or 3 trading sessions on this show, gold and silver prices continue to remain under pressure. The 30,450 level is now a de facto short-term hurdle for the bulls to overcome. Even above that threshold, I think 30,600, 650 levels will be a maxing out point for the long positions. Therefore, the downside potential appears to be more likely than any upthrust, with 29,600 to maybe 29,750 becoming more realistic than a 30,450 kind of an upthrust. I would seek short selling opportunities at higher levels with no hurry for bargain buying or bottom fishing on either gold or silver.
Ajay, what is your sense between gold and silver? Where do you see a sharp slide coming in? And do you see a rebound again in the markets tomorrow? Because as of now, it really is the confused, jittery moves.
Good evening, Manisha. As no doubt last week we have seen a good bounce in both gold and silver, but the concerns from Ukraine and China is slightly settled down. But since last 2 days, market is under profit booking. No doubt in international we have seen a gold taking a resistance around 1385. We expect looking to the Fed meet, market will slightly trade in lower side. Maybe we can see once again 1320 in dollar terms. Whereas on domestic market, rupee is most crucial factor seen from last 2-3 session. Market no doubt trading in a range of 61 to 6150, but as of now we expect looking to the Fed, prices of gold can drop up to 29,850, whereas in case of silver, no doubt base metal has seen very much sharp fall, so maybe this fall can continue in silver prices also. If silver price is trading below 46,000, maybe we can see prices coming once again in the range of 44,800 level.
You mentioned about the base metals, Ajay, and what really is your sense onto that? Because the only bright spot can be seen as nickel, which has gained up nearly 16% in this year till time.
See, in base metal, no doubt nickel has outperformed in respect with copper and other base metal. Some supply concern from Indonesia, and also there has been talk that stock has been continuously making in nickel because of supply concern will continue in nickel. No doubt even the premiums in Europe market is around $45. That is quite high since 2012. So maybe we can see some more rally in nickel prices can test 1020. Whereas in case of copper, we see prices has already broken 6600 level. In LME and domestic market, 400 was a very crucial support. It has already broken. Some more weakness can be seen in the copper prices around 392 level we can see.
Vijay, how would you be approaching the sector right now, especially with the fundamentals given and ahead of the FOMC?
Manisha, easy money or cheap money is mother's milk for a bull market. And as you see tapering coming in, as you see talks of tapering gaining momentum, I would expect industrial metals to soften even further. The only bright spot, like you rightly pointed out, was nickel, and I'm using the word was because I remember talking about 990, 995 levels approaching a top. You see an intraday high of almost 998, and that's where a lot of pressure came in on the screens. I would expect, give or take another 10 rupees from there to be a top for nickel. So if I see prices approaching the 4-digit mark, even 5 or 10 rupees prior to that, I don't really mind shorting nickel, because I would expect nickel to test anything between the 968 to 974 threshold. So I'm seeking short selling opportunities on industrial metals starting from nickel. The others have been bearish, so the potential decline in other metals like aluminium, copper, lead or zinc is unlikely to be as much as nickel. Nickel remains a prime soft area for the bears to try their hand.
All right, Manpreet Gill, who's head of FICC strategy, Standard Chartered, also joins us on the show. Manpreet, hi. In the view of ongoing QE tapering, how do you see it impacting the gold, oil and the rest of commodities?
For us, the next logical step is the market begin to question when and if the Fed is likely to begin raising interest rates, and to us that is what is likely to impact the commodity markets. Again, a continued recovery means that that's likely to be negative for gold in particular. If interest rates are likely to rise, that ultimately raises the opportunity cost of holding gold, which yields you nothing. Higher interest rates are positive for the dollar, which again are a negative for gold. So we're still bearish on gold. I think in energy prices, it's slightly different. I mean, energy prices have remained largely within a range. We expect that to continue, but there's more the geopolitical premium that's changing, less so a function of what's happening on US Fed policy.
Fair point. Vijay, how would you look at the energy space? Because that is one area that also has been under pressure. We've seen natural gas prices decline. We've also seen crude prices come off.
Manisha, crude was due for a technical rebound, more of a short covering rally that we talked about yesterday. Yesterday I talked about 6040 to 6065 levels. There you have crude trading above that threshold. So my guess is if you see 6120, 6130 kind of levels, it would be a near-term top with selling emerging at those levels. At this point in time, the support base has shifted higher to 6020, 6025 kind of levels. I would bet on some more declines in crude. Where natural gas is concerned, it remains under pressure, and natural gas prices have a limited upside potential as compared to crude oil. So given another 3 to 4 rupees advances from here, I think natural gas is due for some more declines from there also. So in both these cases, I would want to start looking out for short selling opportunities. I would let the screen tell me if at 278, 279 natural gas is coming under pressure. I don't mind taking a punt on the shorts. If 6120 odd levels, if crude oil prices go there and bearish pressure starts emerging, I think you should start seeking short opportunities there too.
Ajay, what's your sense on this sector? Because on one side, there's not so much happening in Ukraine. It's not completely out of the market as well. But ahead of the weekly inventory numbers, FOMC, how would you trade?
See, in case of crude oil, last week, no doubt, we have seen a continuous fall after the last week's inventory. Market has totally ignored the Ukraine issue and geopolitical tension, even the Chinese update also. But since yesterday, we have seen some bounce. I think today also we can see some bounce up to 6140, 6150. Today, expiry is there for the near one contract on MCX. And secondly, today's inventory is expected to be slightly below 6.2 what we have seen last week. So short-term jump in crude prices can be seen, but overall we expect trading below $101 in international. Maybe we can see a drop up to $94 once again. In case of natural gas prices, no doubt consolidation is going on between the range of 268 to 280. A short-term jump up to 278, 280 can be seen, but overall we expect for next 15-20 days the outlook will be bearish to test once again 254 to 55 level.
And the latest from the Forward Market Commission is that they have decided to levy up to 5% penalty of the shortfall in the required margin money on members of the national commodity bourses from 1st of April for failing to collect the required amount from clients. The exchanges have also been asked to put in place a suitable mechanism to enable members to report collection of all the margins from their clients at end of each trading day and to report short collection and non-collection on 5th day. The brokers are required to collect the margin money from clients, which is later deposited with the exchange. The margin money includes a percentage of the value of commodity that a client is keen to trade on. The FMC has issued fresh guidelines as the regulator has noticed several instances of non-collection and short collection by margins by members from their clients during the inspection of their books of accounts. Well, that's the latest, of course, coming in from FMC, but let's talk about the commodity prices yet again. And Vijay, we have seen huge movement yet again continuing in case of the sugar and chana prices. How are you looking at trades there?
Manisha, the price movement is primarily in chana today, because you are seeing the onset of summer acting as a very bullish trigger for chana. The primary target that I had listed out was 3375. We haven't reached there yet. Although we were within some distance of hitting that target, I still think chana has some more headroom. There is a possibility of even exceeding the 3,400 levels, but the rally, the momentum or the impetus, the speed at which the price rise will come will be far slower than what you have seen so far. So you may want to hold on to existing long positions, but creating fresh longs at this point in time is somewhat of a risky affair.
Let's also get in one more sense on the chana prices, and joining us exactly for same is Praveen Dongre. He's MD Glencore. Praveen, hi. There have been concerns on the pulses crop due to untimely rains, unfavorable weather as well in the growing areas. What's your sense now on the crop damage, or rather the final size?
Well, we have witnessed some damages. As you know, that there have been unseasonal rains, there have been hailstorms in parts of Maharashtra, in parts of Madhya Pradesh. Crop mapping is not done in India very efficiently, but what we hear from our sources is there has been a considerable amount of damage, and we will see damaged material being harvested this year. There was enough acreage was planted, so we don't have an issue on that. But I think yields and damage will be the issue once the crop is harvested.
Praveen, also, what's your near-term view on the prices then? Do you see further gains because of these weather concerns?
Near term, my view is, of course, my personal view. In the near term, I see chana prices rallying, but once the arrival pressure starts sometime end May or mid-May or end April, mid-May, we might see some correction, stabilization of prices.
All right, Mr. Dongre, we'll let you go. That's the view coming in from Praveen Dongre on chana prices. A good 2% of gain today and can run up further up to the month of May. But Ajay, getting you in the conversation, how are you looking at the edible oil space? Because that has been, or that has seen under some pressure today.
Definitely today we have seen some profit booking, but I expect that internationally the weather condition is still concerning, and global clues for particularly soybean is slightly supportive. Maybe we can see rally continue for further 2-3 sessions that can touch the price around 4,400. And overall on domestic market supply concern is going on. So timing we expect a bounce will continue in soybean prices.
Ajay, also how are you looking at the spices, especially turmeric and cardamom, because there has been huge activity in that one?
In turmeric, we have seen prices has broke down the level of 7,000 level and continuously trading under pressure. No doubt today we have seen some bounce coming back in the market, but that is short-lived. We expect prices if comes near to 6,700, one can take short position. We can see prices coming around 6,200. This year also the crop size is quite good, and carrier stock is, as already we know that there is a huge carrier stock. No doubt there has been update that farmers are not willing to sell at lower prices, but we expect continuously the arrivals are quite good. Prices may test around 6,200 level.
The other two volatile ones, Vijay, always are the potato and mentha. What's your latest strategy on that?
Manisha, mentha I think has fallen and falling with goodish volumes, and you are seeing trader interest coming out and shorting the highs. I think mentha will have a huge amount of challenge on the upside, especially as it tries to scale the 900 levels. So you're likely to see some declines before any kind of a sustained upthrust comes in. I would not be surprised to see 848 to 855 levels in the coming 1 or 2 trading sessions. Thereafter, one needs to take a fresh view about how it goes from there. But at this point in time, the 885 to 890 band remains a pressure point. Where potatoes are concerned, you've seen the March month futures logging almost 1.2% in gains. But the action is clearly shifting beyond the month of June and July. That's where declines are now slowly coming in. So the basis play that you were enjoying, a huge exaggerated 40% cost of carry on an annualized basis, is now shrinking. So traders who were going long expecting prices to go up in a very parabolic manner are likely to get disappointed. I would expect potato to start coming under pressure. Your guidance will come in from the March month futures. As and when it approaches the 1200, 1220 band, I think you should be going out and shorting July or later.